Okay, so let's get into the story. This is from The Guardian, and this is from today. Will the CV pandemic kill the oil industry and help save the climate? And we've been talking about the oil industry going down, 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 which is, is good news for the climate. It's actually very good news for the climate. Also good news in the short term for people that need to use oil or gasoline products because they're very cheap right now. But all of this downturn in industrial activity is great for the climate. Doing more for climate change than any protest has done before. So analysts say that the CV and a savage price war means the oil and gas sector will never be the same again. The plunging demand for oil wrought by the CV pandemic combined with a savage price war has left the fossil fuel industry broken and in survival mode, according to analysts. It faces the gravest challenge in its 100-year history, they say, one that will permanently alter the industry, with some calling the scene a hellscape. The least lurid description is unprecedented. A key question is whether this will permanently alter the course of the climate crisis. Many experts think it might well do so, pulling forward the date at which demand for oil and gas peaks, never to recover, and allowing the atmosphere to gradually heal. The boldest say peak fossil fuel demand may have been dragged into the here and now, and the 2019 will go down in history as the peak year for carbon emissions. But some take on an opposing view. The fossil fuel industry will bounce back as it always has, and bargain basement oil prices will slow the much-needed transition to green energy. There's a little chart here with oil prices all the way down to $20 a barrel. It's actually under 20 for some markets. Who is right depends on a heady mix of geopolitics, profit, investor sentiment, government bailouts, and net zero emission targets, campaigner pressures, and not least, consumer behavior is virtual working, for instance, the new normal. What is beyond doubt is the carnage in the sector. The lowest oil prices for almost 2 decades, with worse potentially on the way. Some major stock market valuations halved since January. At least 2/3 of annual investment, $130 billion dumped, and tens of thousands of job losses. In a few markets, prices have gone negative. Sellers will pay you to take the oil as global storage capacity fills. The price war and CV-19 have really thrown the oil and gas sector into turmoil, and now we have companies really in survival mode, said Valentina Kretschmer, Director of Corporate Research at analysts Wood Mackenzie. Oil wells responsible for almost 1 million barrels a day may have already been shut down because the price of oil is now lower than the cost of shipping it, according to U.S. banking giant Goldman Sachs, with the number of wells growing by the hour. This is likely to permanently alter the energy industry and its geopolitics and shift the debate around climate change, said Jeffrey Curry, head of commodities at the bank. Demand for oil has plummeted as the coronavirus locks down people in their homes and airplanes on runways. The virus will spring forward peak demand for fossil fuels, said Kingsmill Bond at Analysts Carbon Tracker. Is this person's name Kingsmill Bond? Okay. This latest cyclical, I'm sorry. You're doing too much. The latest cyclical oil shock is hitting an industry already heading towards a structural peak, created by nations committing to net zero future emissions, he said. As for the impact of the virus on the timing of peak demand, it depends, of course, on the severity, he said. In 2018, Carbon Tracker estimated peak demand would come in 2023. But Bond said it was possible that the crisis has advanced this by 3 years. That means that peak emissions was almost certainly 2019 and perhaps peak fossil fuels as well, he said. It will be touch and go if there can be another mini peak in 2022 before the inexorable decline begins. While the oil companies themselves have long argued peak demand is too far off to put a number on, most observers thought it would happen this decade. Mark Lewis, head of climate change investment research at BNP Paribas, agreed the crisis could bring it closer. When the dust settles, the peak demand narrative will be there stronger than ever, he said. This is particularly true if long-haul aviation fails to recover. This has been a very strong source of oil demand growth in recent years, but the longer we are at home, remote working, using video conferencing, the more people will wonder, do we really need to get on a plane? Awesome question in this time of climate change. The oil price plunge has also demolished the lucrative returns on exploration projects in which investors have become accustomed. This threatens what Lewis called the golden dividend era of the last 2 decades, which has made oil stocks mainstays of portfolios. Wood Mackenzie last week analyzed the impact of an oil price of $35 on companies' previous investment plans for 2020. It's a very, very ugly picture, said Kretschmer. At $35 per barrel, 75% of projects don't even cover the cost of capital. We are now at an average of probably $20 a barrel between different crude oil prices. If even that, we might even be below $20 a barrel. Most strikingly, the fat rates of return projected for the oil and gas projects have slumped from about 20% down to 6%, she said. That's very much in line now with what you can get from solar and wind projects. The oil and gas sector is already a very much unloved sector by investors in this kind of oil price environment. It becomes low return, high risk, and high carbon, Kretschmer said. It is not a very attractive proposition. With oil prices predicted by some to collapse even further, Kretschmer is blunt. At $20, the industry will be decimated. Ooh, that's a great word to hear in conjunction with the fossil fuel industry. The oil industry was already under pressure from investors concerned about the climate crisis and increasing regulation from governments to cut emissions. Colin Melvin at Arcadico Partners, a consultancy advising some of the world's biggest investment management and pension funds, said that after the crisis, he expects investment to flow increasingly towards companies perceived to offer wider social benefits. The purpose of this investment of capital and business to create well-being, to create wealth in the true sense, and I think that is going to become more and more relevant to investors. Oh, you guys sound like socialists. Are you capitalists or socialists? What's it going to be, guys? Adam Matthews, Director of Ethics and Engagement at the Church of England Pensions Board, said the implications for the oil and gas sector could be significant. Demand reduction could be the catalyst for rapid change, and I think investors are going to look at long-term systemic challenges very closely and want to see much greater resilience, as well as climate concerns. The wild instability of the oil markets provoked by the crisis may also deter investors, according to analysis from the University of Oxford's Institute for Energy Studies. This is a market that is being tested to its limits. However, not all experts think the oil industry's loss is necessarily a gain for green energy and the climate. If anything, it may hold up the share of oil for longer because it's cheaper. Could be bad news from a climate point of view, said Dieter Helm, professor of energy policy at the University of Oxford. He said securing a green economic recovery from the CV crisis will require deliberate policy measures from governments. This is where the carbon tax, carbon tax, now is the moment. Please shut up about the carbon tax. It's just not. That is not going to help. I get the theory behind it, but it's just not it's not holding up to actual implementation. You actually have to just nationalize and phase these things out, and you have to just go distinctly in another direction. Carbon tax is still, it's a tax, for one, that mainly hurts people with little money to deal with the problem. Historic opportunity governments are deploying stupendous sums to stimulate the coronavirus-racked global economy. $5 trillion from the G20 nations alone. $5 trillion. But how it is dispersed remains uncertain. European Union leaders have promised to make their emergency measures align with their Green Deal program. And Fatih Birol, executive director of the International Energy Agency, has said there is a historic opportunity to pour investment into energy technologies that cut greenhouse gas emissions. The $2 trillion U.S. CV relief package is doling out $60 billion to struggling airlines and offering low-interest loans that are available to fossil fuel companies. This is exactly the wrong thing to do at this very moment. If you are concerned about climate change, the right thing to do would be to let those companies fail, flop around like fish on a hot tarmac, and die. Without requiring any action to stem the climate emergency, the Canadian government has said it will give loans to its oil companies who say they are on life support, of course, because, Canada, so progressive, so liberal. After the 2008 global financial crisis, there were high hopes that the trillions of dollars delivered at that time would green the economy, but fossil fuels and their emissions powered on ever upwards. Bond said, the big difference to 2008 is that the cost of renewables is now below that of fossil fuels. There's no point trying to sustain the unsustainable high-cost fossil assets in any event. It would be deeply ironic for neoliberal advocates of Ayn Rand to ask for a government bailout, of course. Adrian Buehler, an economist at the Commonwealth think tank, said governments in countries like the UK, US, and Canada should now consider nationalizing major oil corporations. Adrian Buehler, ding. Fossil fuel companies won't be allowed to fail en masse. No, they won't. Any bailout should be, at bare minimum, come with equivalent public stakes in the companies and strong conditions for environmental and climate protections and a transition away from fossil fuel production. However, given the intent of acquiring the stakes should be to wind down production as rapidly as feasible while ensuring a just transition for workers and security of energy supply. Right now is a great time to transition a lot of people away from the jobs they're doing into green energy or greening the environment. And we're giving away money right now to a lot of people, not as much as we should be, but if you took all those investments away from the fossil fuel sector or the airline sector, you can put that towards maybe transitioning us to a low emissions economy or a low impact on the environment economy. We could do a lot right now, but guess who didn't help in pushing for things like that? The Bernie Sanders, the AOC, the Elizabeth Warrens, the Ayanna Presleys, the Rashida Tlaibs. They didn't push for it. Our progressive cohorts in government, or the people that supposedly represent us, didn't push very hard. I mean, they probably pushed, they pushed like this. They didn't push very hard. They're like, we oughta. So, I think the people who consider themselves progressive should really consider, A, pushing these people harder, but B, putting forth other, ways and means in which we can make substantive change in our society. But the global industry trade body, the International Association of Oil and Gas Producers, insists its members have a vital role after the pandemic. Oil and gas plays a significant role in the global energy mix and will do so in the future, said a spokesman. It is too early to predict what the midterm impact will be, but the oil and gas industry has a history of successfully responding to difficult situations, and we anticipate that it will adapt as it has before. Furthermore, the industry has been a key engine of prosperity and a driver of innovation for many decades, he said. It has the experience, the skills, the knowledge, and the resources needed to realize a low-emissions energy future. A transition that would be more difficult and more expensive without it. Okie dokie. Saudi Arabia is desperate to cash out. Adding fuel to the fire of the pandemic is the price war being waged by Saudi Arabia and Russia, who increased production just as the pandemic slashed demand, sending prices towards the floor. The moves are seen as an attempt to grab market share by killing the higher-cost producers behind the U.S. shale boom. This is another interesting coincidence, though, if you really want to start putting the coincidences together. If you want to start stacking them up on the table of coincidences, the fact that this whole thing happened, the entire, there was a huge, drastic global downturn in industrial output and in the use of fossil fuels across the board. And at the very same time, Russia and Saudi Arabia do this oil glut price war thing. Maybe that was strategic. Maybe they thought now is a good time to do this. But I'm, in the back of my mind, I also consider this slightly fishy. What really was the point behind this? Professor Bernard Heikel at Princeton University, U.S., said it also reflects a more fundamental strategic shift led by Saudi Arabia's Crown Prince bin Salman. With a global clean energy transition inevitable, he's desperate to cash out while the kingdom still can. The lasting impact of the price war depends on how long Saudi Arabia and Russia can keep pumping cheap oil. While their production costs are very low, they depend on high revenues to balance their national budgets. Michael Liebrich at Bloomberg New Energy Finance said the fiscal break-even for Saudi Arabia is around $80 per barrel. Wow. Meaning its foreign exchange reserves might sustain rock-bottom oil prices for only 2 or 3 years. Russia, with a $40 a barrel fiscal break-even and much more diversified economy, can survive low oil prices for a decade. Whatever happens to industry will never be the same again. After that double whammy of the pandemic and the price war, the companies that emerge from the crisis will not be the ones that went into it, said Carbon Trackers Bond. We will see write-downs, restructuring, and radical change. Experts, including Curie at Goldman Sachs, say the climate change debate will almost certainly take a different course after the crisis. Will it? Or will it ever take course again? I don't know. But exactly what looks like remains to be seen, what that looks like. The question is how long this is going to last. No one really knows. Okay, the end.